Hey, what's up? Good morning, everybody. Welcome to another review. We're going to be covering XRP on here today. So, previously, when we had got on, I'm just looking at the 1 hour. So, we had talked about this channel. So, previous Sediment, just real quick, it's bullish. So, we're still maintaining a bullish Sediment. And believe it or not, this is still, to me, bullish structure because we have a downward consolidating channel into a support. The 60-cent support pretty has historically turned away price both as resistance and support in the past. So just real quick, just zooming in here. So the ETF was removed from the Delaware, I think it was, site. So the application for XRP, the false ETF, and they've launched an investigation. So was expecting price to go down more when this happened, but what happened was Bitcoin, and I'll just touch on this real quick. Not going to take a lot of time, but Bitcoin slipped. They're saying because of the unexpected decline in inflation. So just want to go over this real quick. The Bitcoin price recently lost momentum, dropping below 36,000 as it charts a different path from the stock market, which impressed investors amid lower than expected inflation figures. So that consequently had an effect on XRP. One of the reasons why I wanted to get on here is because currently, and by the way, none of this is financial advice, just when you're doing analysis, you got to realize that you're not always going to get it right, and to me, I never really get it wrong because I don't really know. What we're doing is we're trying to get a higher than likely possibility. That's it. And so it's a possibility, and what we're doing is combining a series of indicators. What's an indicator? An indicator is something that has the possibility of historically reversing the price or leading to something that may reverse the price or continue the price in this case. So we have a downward consolidating structure. So this is a type of market structure. And then also, so this is tends to be bullish, and we have previous momentum was bullish. So the reason why this downward consolidating channel is seen more bullish than bearish is because sellers are not breaking, they're not making great strides. So they're maintaining these boundaries. You can see here when price came up, this line was already drawn. We had an ascending broadening cone, so this is a bearish market structure. We came right up to the line and were rejected. This pattern broke, saw it break on the 15. We have this resistance. Okay, so what we're doing is we're stacking up reasons or conviction. So, you reach a certain level of conviction, and obviously risk management plays a major role in this, because while you're trading, and just real briefly, I'll cover this. This is a broad subject, but for those of you that don't have a clue what this is, you can get a broker and leverage this. You can turn your $100 into, or $1,000 into, 10,000, whatever. But we risk a small portion to get a larger portion. So I actually had dropped this in the group while we were over here. We had got a bullish engulfing on retest on the 15-minute. So you manage your risk. 1.22% for, say, maybe up to this resistance up here. So that would give you a ratio of 3 basically 3.5. Let's make it 3.5. Or let's just make it 3 to be simple. So say you have a broker and you're leveraging. So, your money is amplified. So you want to minimize your risk if you lose. So in this case, we're doing 1 to 3. So let's say you had $1,000. Okay, you had $1,000. You're leveraging, and this would equate to this loss. This base would be a loss of $1,000. Well, on the other side, you have $3,000 to gain because it's 1 to 3, and you repeat this. You don't always win them all at this rate. At a 1 to 3 ratio, you could actually win 3 of these, or you hit 3 targets, and you can lose 7, and you're still in the profit, because 1 times 7 would be 7,000. So if you lost 7 times out of 10, that'd be 7,000. But if you won 3 out of 1,000, so that would be 9,000. So you're $2,000 in the profit. This is the biggest obstacle that traders face, is dealing with the accepting of risks and being able to see improbabilities. So you could lose, theoretically, in this example, you could lose 7 in a row, hit your last 3, and be in the profit. But what happens is, a lot of times traders will hit those, and will start to lose faith. You start to wander away from your trading plan. You start to increase risk or decrease risk. You move your stop loss, gaining more exposure when you shouldn't, instead of just letting the numbers play out. So this is a huge obstacle for traders. You can apply this to a larger time frame, if you're an investor or swing trader. But we're intraday, so we're looking at catching small moves. If you had $1 million account, or even $100,000 account, then this could turn into a $3,000, $4,000, $5,000 move if you're trading responsibly. Anyways, just wanted to cover that real quick. So if anyone's wondering, what are we doing here? We're traders, so we are looking at this like this for intraday. But anyway, so stacking indicators, we have, let's count them. So we're looking for indicators, and these are things that historically turn the price around. This 60-cent support, okay? That's one, because we saw price stop here, here, here. So historically, and even further back, there's a lot more, where the 60-cent area has turned away price, whether from below, rejected as resistance, and in our case is acting as support. And we're looking at this supporting trend. So 1, 2, 3, 4, 5, 6, 7, 8. And so something that happened here, and one of the reasons why I want to get on here, so this support would be 2, right? But here's the thing, we haven't gone down, and this is why I wanted to get on here. We got from going from down to sideways. Next thing I'd be looking for is a break here. Let me get rid of this thing real quick. What we'll be looking at here is a break, an hourly close above 61.75. If we broke up here on the hour and we got above this center, the center of the channel, then this will be another indicator. So this spinning top, it's still a bearish candle, but it shows rejection. We stepped, instead of going to the side, we went over. Okay, so there's 2 more indicators. So we're at 4 indicators, because we missed the trend, we went sideways, and we got a little bit of a bullish confirmation. If we get bullish engulfing, where it shows buying gets to be greater than this candle, than the previous bearish, and we get above this center point, then that would be another indicator. So then you're looking at 5 indicators. Down here, this is the RSI, and this measures the market's volume, selling and buying volume, not volume, but momentum. So this is showing us, if you look here, this is showing this peak, or this low here, dip down, and this one is in Confluence with this one. Well, if you look at the chart, these are showing that it's going straight across. If you go to the candle bodies, and down here we're at the oversold, so that's 6 indicators showing it's oversold. So this is pretty much confirming the support as a low. And then also, if we get a bullish engulfing up here past into, let's just say 62 cents on the hour or close, and we get back out of the support, then that would be 7 indicators, I think, if I haven't lost count. So another thing that you can add to this confluence of indicators of probability, so as you're doing this, you're getting a higher conviction of the possibility that this could play out. There's an extent to where you get too much, but one last thing that you could add to this would be a positive breakthrough in the XRP case, or a Bitcoin ETF. Some XRP people might not like to hear that, but it is what it is. You can't deny that. When Bitcoin goes up, XRP will go up. But anyways, I really didn't want to make this video too much about XRP, even though we had talked about this possibility, mentioned that I was going to be watching this area here. We can be watching this area to see if price missed. And right now it's missing. Does it mean that it's going to continue to miss? No, it does not mean that. But if we clear this area here, then that, or break this market structure at this point, or let's say maybe we get some more rejections down here. Let's say maybe we come down here, maybe we form a triple bottom. So we're looking for our more sideways actions, and ultimately for a bullish scenario we're looking for a break to the upside, because this particular type of market structure, everything's pointing up except for the fundamentals. So the fact that the XRP ETF application was taken down off the site, that was bearish, but we really didn't see anything. I was expecting, honestly, to see another drop when it was taken down, because the way that I was seeing it, people were holding their positions still, and we were holding this level right here, because, or rather this level, because the application was still up. But the fact that it's taken down and people are still speculating, that there's going to be a possible XRP ETF in the mix, then I'm a little bit surprised, to be honest, that price is still here and that we're still holding here. We're also above the 150 and the 200 MA moving averages. So we are holding. We have missed the trend. We've missed the trend before here when we posted this in the XRP group, but this did turn into a inverse head and shoulders right here. Our falling wedge posted. This didn't play out all the way. It doesn't always. Again, this is a majority of the time this happens. So we did get the inverse head and shoulders. Did not enter because of this wick. And then this consolidation right here, tendencies to break down. So we basically closed up this gap here and went down. But so market sentiment remains bullish despite what people are feeling. This doesn't mean that price is not going to do this. So thinking in probabilities is what most people struggle with. Thinking statistically, people are not naturally wired this way, especially when there's money involved. But losing money is part of the game. As long as the long term, out of 20 positions or 20 trades, that you come out and your scenario plays out just like we talked about with the 3-to-1 scenario, then and you overcome those seven failures, and you get to the end and you get to see those 3 wins on a 1-to-3 scenario. You're still 2,000 in the profit Okay, that's a really big struggle because emotions are a huge role in psychology in this. Is really, it can really take a pounding on you. So anyways, that's most people's hang up. That and how to measure the risk. Like, how do you guarantee that you're only going to lose? How do you manage your leverage to where you're only guaranteed to lose 1,000 or make the 3,000? That's another one. But anyways, that's another topic. Just wanted to go over this. So, not saying that this isn't a possibility. We go up, complete a pattern, which would be a double bottom. 1, 2. We break this market structure here at 60. Say we go into 62.5 cents up here, then we could still pump and dump. Okay, so if something like this happens, then this will be an intentional move. Large players will push the price up as much as they can. They have risk too, so they'll pump it up to a degree. They do their calculations. This is all math stuff. It's mathematical. So they will push the price up so they can sell at a premium before a drop and then go down and buy it again at the bottom. So, the whole buyers and sellers gig, I say gig, I mean the whole buyers and sellers terminology, like they're separate people. A lot of the times, the people that push the market up like this are the same ones that buy it down here. So, with that being said, some people may be like, well, how the heck can you ever be profitable if this stuff is going to happen? Because this doesn't happen all the time. A lot of times when you get, if this plays out and we get this much confluence and we miss this area down here, then the majority of the time, about 65% of the time, 75% of the time with these confluences, and if we had a fundamental catalyst, then I would say 85, 95%, closer to 95% chance that this would continue up and we would see a resuming of this previous trend. So what could that look like? Let's take a look real quick. So get this out of here. And by the way, I don't really look at charts this way, but for educational purposes, just point this stuff out to bring, awareness, because understanding, because a lot of people, I know that if I had this kind of information when I had first started, then, we'll be obviously a lot further along. But we'll share, because the closest thing that I can get personally to helping myself back then is sharing what I've learned now, in the hopes that someone could take this and benefit from it. With the risk scenario we were discussing earlier, going over earlier, with managing your risk and your reward, your profits and losses to work out in your favor. And to do it with precision. To do it with precision is something that I just learned about 1.5 years ago. So, and I've been doing this for over 5 years. So, and really the market structure and Sediment, all this stuff needs to be in agreement for you to have, for you to reach a higher potential. Now, your greatest potential is, in the end, is not going to be about, how much you learn about the markets is going to, and continue to improve your trading. But it comes down to more about knowing yourself. What causes you to over leverage? What is the result? And we're constantly losing information. It's in our nature to lose information. We're constantly trying to forget. So, like today's thoughts are 90% yesterday's thoughts continuing. But so we don't have come to any other real solutions as these conditions change. So that can be an issue, because mind has to be ever evolving into new possibilities as market conditions change. So it's kind of a bit of a strange dynamic there, but really important to grasp and understand that. So we're looking at a possible, let me change this into white just so we can see it real quick. We're looking at a possible bull flag still. I'm not saying, again, none of this is financial advice, just saying in general, yeah, we're looking at XRP, but this goes across all markets. It's the same. Okay, so different catalysts, different fundamentals on a macro scale. What's pushing the market other than technical levels and people pushing the market up, this and that and the other. It's the same price action. So what we do is we teach people to read charts and how to read the news and how to put them together for your highest level of conviction probability that you will be doing more winning than losing. And it's as simple as that. If you're confused, then and you want to learn, then just drop a message, drop a comment, send a message. If you're seeing this in the XRP group, if you're a follower on Trading Success Forex, then just drop a comment underneath the page. Also, if you're seeing this on YouTube, then just drop a comment. If you have another insight that you have, maybe some development that we are not covering, then, also feel free. We welcome anybody to drop in their insights. Again, we are sharing this stuff because there's value in that. And not to say that we want people to agree with this, but to challenge your thinking, because if you're stuck in one way of thinking from yesterday, say from this crash, and you're like still worried about that crash, and that's all your mind is thinking about, oh, we're bearish, we're bearish, we're bearish. Well, your mind did not adapt to this possibility. And it's not saying that this possibility is what is going to happen. It hasn't matured. Here we are on the 4 hour, but it's a possibility. And right now, minus the lack of fundamental indicators, it's bullish right now until we break the support, or rather we come down to and say we have a candle set, not one of these guys. So we could have one of these guys come down, boom, tap this 57, and then go up and shrink and close back up in the channel. What we'd be looking for a bearish scenario would be on a 1 hour, because we're trading intraday. For a bearish scenario, looking at a break down here past this support. So a break below 57 cents into 57 cents, that would be, bearish. But, you got to take things one day at a time. You got to, renew your thinking every day and adjust, what process the information, the new information is new every day. Structure changes, sediment changes, both technically and fundamentally, constantly. So you can't be thinking the same things that you had in your mind yesterday from a drop if you got emotional here. Because these wicks on the bottom are showing rejection. As of now, we still haven't reached this trend, so that's showing that buyers are getting hungrier. We saw on the RSI, we went all over these indicators. But again, one thing that we are missing are the fundamentals. And at this point for XRP, it's hard to know what the actual fundamentals are. I know there's a lot of people with this particular instrument that are really, really getting fed up because there's been so many price predictions, $1,000, $10,000, $100,000, $100, $5. Some people say it's going to stay at $1. Some people, so you just got to keep your mind open and, stick to your playbook and, don't be stuck in one way of thinking. Like, don't carry yesterday into today. You got to be renewed in your mind and in your emotions. But anyways, you guys, I just kind of wanted to go over this, Confluence. Let's go over it one more time. We have bullish sediment. It's okay, previous. So that's 1. This is a downward consolidating channel. That's 2. As of now, we're missing the trend. That's 3. We're at a support. That's 4. Also, we're oversold on the RSI. 5. we had bullish divergence. That's 6. The unknown is, typically shoot for 7 indicators, and I want one of those to be fundamental. With that being said, just paying closer attention to this, but I wanted to show you how, even though with all these indicators that are pointing us up, things can drop in a second. This whole Bitcoin slips because of the inflation figures. Like, do you think that's kind of a funny coincidence? We had the false ETF here, and then what happened? Bitcoin dropped, and this is because of Bitcoin Sediment. So knowing that people put their stop losses and targets and limit orders and all this kind of stuff here for liquidity, this to me honestly just looks like we are getting this. Investors are gaining a lot of money because this is wiping a lot of people out, scaring the piss out of people, getting people high on euphoria, bringing them down to depression, to confusion, like not knowing what to expect. So hopefully this helps a little bit. If you have any questions, just drop them in the comment. If you're wanting, make sure and follow the channel Winning with Ryan, our Facebook page, Trading Success Forex. If you're in the Ripple group and you're wanting to see other projects, other investments, we're going to be going over metals and Forex, and we're also going to be covering indices, S&P 500 and the NASDAQ starting next week, and we're going to be trading them leveraged. So we're going to be using this platform for testing. We have started a new one. We passed the last one just trading cryptos. We hit our profit target of over $500, okay, on a $10,000 account. We actually passed our last 2 trading cryptos. So we're going to be doing testing on, and again, we're testing our numbers. So when we talked before about litigating risks, our maximum risk for an A+ trade is 2%. So just to give you an idea real fast, I really didn't plan on sharing this part, but this is what that would look like at a 2-to-1. But let's go to 3-to-1 like we discussed earlier. So on a $10,000 account, 2% risk. And by the way, if you're a trader and you don't have this or something equivalent to this, then you're probably not consistently profitable over the series of months and years. This stuff has to be very rigid. Okay, you can't allow for guesses. I don't want to get too far into the subject, but you can't have huge losses and minuscule wins. So what this does is it keeps it the same, adjusts your leverage for you. If I had known this when I had first started, this would have saved me about 3 years. Okay, so again, just wanted to go over that stuff briefly. This is what we're going to be covering next week. We're going to be doing, leverage trading. This is pretty much like the mecca of entrepreneurism with trading. It's not like marketing. You don't ever have to ask anybody, say yes. You don't have to clock in. You don't have to, win. I don't know how many marketers there are out there, but in marketing, there's an immense amount of work that you have to do to get momentum going for you to start producing money, and like a whole lot. But with trading, you don't have to consult anybody. You don't have to try to convince anybody, any of that kind of stuff. But it comes at a cost. It's not easily done because of what we discussed earlier, the psychology, risk management, knowing about the markets. Sure, you need to know that, but when it comes to being consistently profitable over months and years, you need to make sure that you're hitting with precision and executing. But anyways, you guys, that's going to do it for this one. Again, you have any questions, just drop them. We do have a platform for educational purposes to teach in alignment how to set all this stuff up. Everything's in one spot. I see a lot of videos on YouTube and they're like, why pay for a strategy? Why pay for a course? And it's not just a course. You get a live community. You get every single thing that you need and nothing that you don't. You go to YouTube and try to, I've always put it like this. If you went to a junkyard and you went and pulled pieces off of every single car, let's say you're trying to make a Toyota, but you're going to off of Ford cars and off of Chevys and Subarus and all that stuff, and you try to put that stuff together, then the chances of you being successful in creating that car and actually being able to drive down the road with it are slim to none. Okay, so getting information from a variety of different sources that have different trading strategies is just like trying to put together a car that it doesn't belong together and is never going to function correctly. So you need a direct line of knowledge that has everything in it to get to your goals the fastest, and you need a mentor. So anyways, you guys, just wanted to drop that real quick. I was looking at the markets this morning and saw, again, that this is a place where we could see something, but again, just keeping my mind open and going to be looking at fundamentals, what happens today. We don't really have a lot going on today as far as news goes in the Forex factory, but if you're new, this is where we look to see what's happening. So today we have the Great Britain pound. We're going to be covering a lot of this stuff this next week. Actually, every day we're going to be going over this. So these are fundamentals for currency pairs, and also the dollar influences indices like the S&P, gold, all that stuff. Also global macro events. So if you don't want to miss that stuff, be sure and stay tuned in. If you want to be a part of the team, then just drop a comment, reach out, send a message. And until then, we will see y'all on the next one. See ya.